All right, it looks like we have a good number of people on, and we do have quite a bit to cover, so we can go ahead and jump right in. Thank you so much, everyone, for joining today. We appreciate you being here. A couple of housekeeping items before we begin. We'd like to let all of you know that this workshop is being recorded, and informational materials will be made available to everyone after the session. If you have any questions, please put those in the Q&A. Some of my teammates are on answering your questions, and we'll also take some breaks to answer questions out loud. And if you need to use closed captioning, I'm sending a link in the chat right now, which includes instructions on how you can get those turned on. So thank you so much for being here today. My name is Jobe, and I'm the Senior Associate of External Affairs here at Savi. I am really excited that you're all here so that we can talk about a new repayment plan, talk about how to prepare for payments resuming, and how you can get started with Savi. For those of you that may be new, here's a little bit about us. We are a public benefit corporation, and we started about 5 years ago to help borrowers just like you all. We are run by experts and advocates that have over 2 decades of experience, and many of us also have our own student loans, myself included. So we have that firsthand knowledge that helps us to better serve you. And last, we're focused on savings. It really is our goal to help you save as much as possible with your student loans through programs like Income-Driven Repayment and public service loan forgiveness. Working here with Savi, we can make it easier for you to manage your loans. We help simplify and digitize the entire process for applying and enrolling in the federal forgiveness programs that we'll discuss. With us, you can reduce your student loan payment by an average of $150 a month. And on average, our users can qualify for about $20,500 in forgiveness. So far, we've helped users find over $1 billion in projected loan forgiveness. And we've made it really simple because we just have one application for you to complete. Once you complete that application, you'll be able to see personalized options for all of the programs that we will discuss coming up. So during today's session, we will talk about a new income-driven repayment plan that's available. We'll talk about how you can prepare for payments to resume and give you all the information you need to know to be ready when those payments are due coming up this fall. After that, we will give an overview of Savi and our account. That way you know what to expect whenever you are filling out those applications. If you have any questions during this time, please put those in the Q&A. I see my teammates are already replying to some questions, and we'll take some breaks to answer questions out loud too. So first up, let's talk about that new repayment plan, which is called the SAVE plan. This is the Saving on a Valuable Education Plan, and it is an income-driven repayment plan available to student loan borrowers. So an income-driven plan bases your monthly payment on your income and your family size. So the SAVE plan will look at your specific situation and base your payment on those factors. That way you have an affordable monthly payment that is manageable when paying on your student loans. For those of you familiar with the existing plans, the SAVE plan will replace the REPAY plan. So the REPAY plan is one that is currently offered and will be going away. It's being phased out right now, and the SAVE plan is now replacing it. If you are a borrower that is already enrolled in the REPAY plan, you're going to be automatically moved over to SAVE and have your payment recalculated. That way, your payment is adjusted to reflect these current standards, and most likely you'll see a decrease in your payment. This new SAVE plan is available for any borrower with direct loans. So if you have direct loans, you are eligible for the SAVE plan, and you can enroll to take advantage of these additional savings. This new SAVE plan will also be PSLF eligible like all other plans. So for PSLF, you are required to pay your loans on an income-driven plan. Since the SAVE plan is considered an IDR plan, you can enroll in this and your payments will count towards forgiveness. Because the SAVE plan is helping lower monthly payments, it also means that by enrolling, you'll be able to receive even more forgiveness down the line. So when is it available? Right now. Borrowers can enroll right now and receive the following benefits. Unpaid interest is going to be covered. So if you enroll in the SAVE plan, Whatever unpaid interest you have left will be covered by the Department of Education. Normally, in some cases, you may be making your monthly payment, and because of that interest, you might not see your balance decreasing, and it can be hard to actually pay down that balance. This new save plan will cover any unpaid interest. That way, as long as you are making your monthly payments on this plan, your balance will never grow, and you can actually get down the line, make progress on your loans, and get debt free. This plan will also be changing how your monthly payment is calculated. So they will be raising the amount of considered income that is considered non-discretionary. Basically, what this means is that borrowers making about $15 an hour or less will not have a student loan payment. This helps protect more of your income from being included in your payments so that your monthly payment will decrease. And for most people, the SAVE plan will offer the lowest monthly payment. That's available right now. So if you enroll, you can take advantage of these savings right away. Next summer in 2024, they're going to be implementing even more improvements. So starting in 2024, in the summer, this new plan will start calculating your payment at only 5% of your discretionary income for undergrad loans. And if you have graduate loans, it will be 10%. Right now, it's a flat 10% rate for everybody. So some borrowers could see their monthly payments cut in half next summer. If you are a borrower that has a mix of undergrad and grad loans, you will have a weighted amount based on your loan types and balances. So your payment will be somewhere from 5 to 10% of your discretionary income, meaning even those borrowers will see additional savings once these changes take effect next summer. Another exciting change happening next year is that borrowers with starting loan balances under $12,000 will receive forgiveness after 10 years instead of 20. So right now, the timeline is 20 years for you to have this repayment plan and get the forgiveness. But next summer, if you had a lower starting balance, you'll be able to get forgiveness in a shorter amount of time. So the way that this works is that once you've been enrolled in this income-driven plan and making payments for these 10 years, if you still owe a balance, whatever balance is left will be forgiven. So this is a great way to get more forgiveness and get it sooner. So let's take a look at a sample borrower saving. In this example, Sam is a registered nurse at her local nonprofit hospital. She makes $77,000 a year. And if she enrolled in the SAVE plan, she could see monthly savings of $234 per month. So this example really shows the benefits of enrolling in SAVE and how it would affect people already on repay. So under the old guidelines, the monthly payment would have been calculated at $295 per month. But because this new plan is protecting more of your income from being included in the calculation, your monthly payment will be lowered. And in this example, the new monthly payment would only be $61. So the SAVE plan is going to be very beneficial for lots of people to have a lower, more affordable monthly payment. How can you enroll in this plan? We've made it very easy for you to see if you qualify and get enrolled. Anyone can enroll in the SAVE plan if you're eligible simply by completing your Savi application. I mentioned that we just have one application for you to complete. Once you've entered all that information, on the final page will be your results page that shows you everything you qualify for. If you qualify for SAVE, you'll see the option on this page, letting you know exactly what your monthly payment would be on the SAVE plan, how far along to forgiveness, and how much forgiveness you can receive. Once you've entered all that information on this page, you can check it out, find out if the SAVE plan is available for you, and simply click that blue continue button to get enrolled and get started right away. So we are really encouraging everyone here to go to your Savi application, enter all of your information, check out those results and see if you qualify. Some of you may have already started an application with us, and we would recommend that you go back and update your information too, because the SAVE plan will now show on there so that even if you maybe have already started this process, there's going to be some new options available to you. So everyone should go in, check these out, and get enrolled before payments resume later this fall. let's take a quick break. Look at some questions that you have. I see lots are popping up. So let's get some questions answered about this new save plan before we move on and talk about payments resuming.
Hey, Jobe, thanks so much for that information. So we had a couple questions come in about Parent Plus loans and whether they are eligible for the new save plan. Could you talk a little bit more about that?
That is a great question. So if you have a Parent Plus loan, there are some specific requirements that apply just to that. Before a Parent Plus loan can be enrolled in an income-driven plan, it needs to be consolidated into a direct consolidation loan. So that's got to be step number one, is to consolidate it. After that, Parent Plus loans that have been consolidated are only eligible for one repayment plan, which is ICR. So unfortunately, the Parent Plus loans are not going to be eligible for this new save plan. If you have a Parent Plus loan, you should still consolidate it and enroll it in ICR in order to ensure that your payments are counting towards forgiveness.
Great, thanks so much. Another question that came through, someone asked, last week I signed up through Savi and submitted an income-driven repayment plan, as well as my PSLF application. Will I automatically be put onto the save plan?
Another great question, and it depends on which plan you're in. So if you enrolled in the repay plan last week, you will be automatically moved to save and have your payment calculated under save. If you are in any of the other plans, though, you won't be automatically moved over. So the other plans, as a reminder, are pay, IDR, and ICR. Only repay will be moved over to save. So if you are in one of the other three plans, and if you want to see if you qualify for save, you can reach out to our support team or check out your Savi application to see if you can enroll through there.
Awesome. Thanks, Jobe. Two more, I guess, before we let you proceed. Someone asked, is there an income stipulation to qualify for the save plan?
Great question. And a lot of people do ask this question. They think that you have to make under a certain amount to qualify, but that is not the case. Income-driven plans are available to anyone, no matter what your income is. So if you have a low income or even a high income, anyone can enroll in these plans. Right now, when you enroll in this save plan, they will do that calculation to calculate your discretionary income, and then your payment will be set at 10% of that amount. So you can enter your income in your Savi application, and on the results page, we will show you exactly what your estimated payment would be by enrolling in an income-driven plan.
Great, thanks, Jobe. And I think last one, and then like I said, or Jobe said, we're gonna, take some more questions throughout the presentation and at the very end. So Kelly asked, for the save plan, when calculating discretionary income, do they take into account if you live in a high price city like New York or other cities throughout the country? So do they take into account sort of, where you live, maybe other bills that you might have, et cetera?
They do. So not to get too technical with all the calculations because they can get a little complex, but what they do is they look at the federal poverty level for your income and family size in your area. So for example, if you live in New York City, they will look at the federal poverty level guidelines for your family in New York City. What they do is they then compare that poverty level to your income, and they run the numbers, and whatever the difference is what they consider discretionary income. So they aren't looking at your whole income. They are factoring in that you may live in a high area, that you have bills to pay. So they run all those calculations to account for that, and then calculate your payment based on whatever is left over as that discretionary income. So in most cases, income-driven plans are affordable for borrowers because they factor in all of those bills and everything else. That way, your payments are manageable. They aren't super high and unattainable. So to answer the question short, yes, they do account for bills. And by completing your Savi application, we will calculate all of that for you because it is a complex calculation. But the Savi application will run the numbers for you and show you exactly what your payment is on an income-driven plan.
Great. All right, Joe, we'll let you keep going and then we'll take some more questions after your next section.
Perfect. So moving right along, let's now talk about something that's been in the news a lot lately and maybe one of the most pressing things for everyone here. Federal student loan payments are resuming. So payments have been paused for over 3 years now, going all the way back to March 2020. The time has come, payments will be due again starting this fall. So interest on all federal student loans will resume on September 1st. This means that after that date, interest will start accruing on all of your loans again. Starting in October is when your payment will be due. So your servicers will be notifying you, letting you know when your due date is, what your amount is. That way you can make that payment in October. But don't worry, we are here to help everyone transition back into repayment, and we're going to talk on these next couple of slides about what that looks like and how you can prepare. So a recent bill that was passed as part of the debt ceiling negotiations put into law that payments needed to resume. So starting on September 1st is when that interest will resume, and your payments will then be due starting in October. Your servicer will notify you of your payment amount and due date well before the due date. The Department of Ed is also looking at ways to ease borrowers back into repayment. As I mentioned, payments have been paused for a long time. Many borrowers haven't had to make payments for over 3 years, and it may be difficult to transition back into repayment. So the Department of Ed is taking some steps to make that process as easy as possible. They've created what they are calling the on-ramp to repayment. So to help borrowers start making those payments once again, they've created a 12-month period that will start on October 1st of this year and end September 30th next year. This on-ramp period will prevent borrowers from being penalized if they miss a payment. So if you make a late, missed, or partial payment, you won't be reported as delinquent and you won't be put into default during this period. This is a really beneficial thing for borrowers because normally, the moment you miss that first payment, you put your loans in jeopardy of going into delinquency or default. But because of this on-ramp for this 12-month period, you won't be penalized if something comes up and you can't make that payment. Interest will continue to accrue during this time. So if you don't make a payment, the interest will still be accruing since interest resumes in September. We want to clarify, though, that payments are still due, and you should make your payment if you can, especially if you are pursuing forgiveness through a program like PSLF. If something happens and you can't make your payment, you won't be penalized for it. But if you don't make that payment, you're not going to get credit towards PSLF or IDR forgiveness. PSLF and IDR forgiveness require that you be actively paying on your loans to earn progress. So if you don't make a payment once these payments resume, you're not going to earn any more progress. I will just throw in a clarification, though, that the only time that can count towards PSLF and IDR forgiveness where you weren't making a payment is the payment pause. Since that was a special situation, the paused months of the payment pause can count. But once these payments resume in the fall, you need to be making payments in order to earn progress towards forgiveness. So how should you prepare for these payments to resume? We encourage all of you to confirm who your loan servicer is and make sure your contact information is up to date by logging into your account at studentaid.gov. Studentaid.gov is the Department of Education's student loan website. So by logging in there, you'll be able to update your contact information and check who your servicer is. That way you know what company to look out for communication and where to make your student loan payments. We also encourage you to check your repayment plan and your payment amount with your loan servicer. So see what your amount due is, see what repayment plan you're on. That way you can see what that payment will be in October. And if you need to maybe change your repayment plan or take some additional steps, you have time to do so. That last step you can take is to use Savi's personalized repayment calculator to enroll in an income-driven plan and lower your monthly payment. So you may be on the standard plan, maybe your situation has changed in the last 3 years. You can use Savi's calculator to see what your payment could be on an income-driven plan and make sure that you're enrolled with the most affordable payment before those payments are due starting in October. All right, time for another round of questions. We're just moving right along. I see a lot have been popping up, so let's take a quick look and find some more that we can answer before we talk about how Savi can help you with all of this in the next half of our presentation.
Hey, Job. So one borrower asks, I have a direct Parent Plus loan. I'm not sure what consolidate means. Can I do that through Savi?
Yes, you can. So I think this is a great example where the student loan process can be very confusing. You may hear all of these terms like consolidate and not know what it means and what your next steps are. But with Savi, we will help lay out that process for you and help you take whatever steps are necessary to get on track for forgiveness. So if you need to take a step like consolidating, we'll let you know. We'll let you know how to do that, and we will walk you through that process the entire way. That way you can get on track for forgiveness and you're never alone.
Awesome. Thank you. Another question that I've seen pop up a few times is if your income changes during the year, can you go back and submit another application so your payment can be adjusted accordingly?
Great question. And you can. So the way that income-driven plans work is when you enroll, you will be approved for a set payment amount for the next 12 months. After that 12-month period, you'll then be required to recertify your income. That way your payment can be adjusted to always stay at that 10% amount. But if for some reason your income decreases before your recertification date, you can update your income early to have that monthly payment lowered so that it is affordable. So if you are enrolled in an income-driven plan, for example, let's say you enroll in one now, get approved, but in December, your income decreases. You can update your income early, and that payment can be lowered to be the 10% of that new amount. That way it's always affordable. So that is one of the really good advantages of income-driven plans is that you can update early and they really are designed to work as much as possible for you.
Great. Thank you, Joe. I'm seeing a lot of questions about, seeing your options, what maybe your payment might look like under Save. So maybe I'm going to recommend, Job, that we go through the Savi section so that you can show our attendees, what it will look like to be able to do this through Savi and how we can help and how they might, if they're having issues, be able to reach out to our support team. And then we can sort of finish going through questions at the very end.
For sure. So moving right along, in this next section, we will cover all of the Savi features, how we work, and then we will actually walk you through the application so that you know what information to provide in order to get those estimates at the end. So by working with Savi, we show you the personalized options. You can see exactly what your payment would be on an income-driven plan. You can see if you qualify for a forgiveness program like PSLF. We made it really easy to see everything available to you all in one spot. We'll also monitor for policy updates and program changes. So any that time something happens like an improvement to a forgiveness plan, the status of debt relief programs, we will monitor that, let you know when new programs come out. That way you can take advantage of them. You can also recertify your income-driven plan and update your PSLF progress every year. So I mentioned that you have to update your income every 12 months. With Savi, we will remind you when it's time to do that. That way, you never miss that deadline and you can stay on track for forgiveness. And two of the biggest benefits, you can sign and submit all of your applications right from your Savi account. We will create them digitally and take care of submitting them for you to make that process as easy as possible. And best of all, you can receive personalized support from student loan experts like my teammates that are on the call. So anytime you have questions about programs you qualify for, you want to talk about your student loan situation, you can reach out and get one-on-one personalized help from our support experts to help you make the best decisions for your loans and get on track for forgiveness. So to get started, for those of you that don't already have a Savi account, you can scan this QR code to get signed up. You'll be asked to pick the organization that you heard about Savi through to get started. If for some reason you're not able to sign up on this presentation, don't worry. After the session, we will send you an email with instructions on how you can get your account activated. For everyone else that already has a Savi account, you can simply sign back in at buysavi.com. So once you have access to your account, this is what your main dashboard looks like. It's kind of the hub for all things that you're working on with Savi. It lets you see things like your application status, general information about your loan. Basically, anything and everything you need to know is available at a glance on your dashboard. One of the features on the dashboard is the ability to invite family and friends to use Savi. So if you know anyone with their own student loans, you can send them an invite to use Savi. That way they can sign up and get help as well. Maybe a spouse, a child, a friend, a coworker, whoever it may be. Simply enter their email and they'll get an invite to sign up. On your dashboard, you'll also be able to select a Savi plan. So we do have different membership levels. We have our DIY plan, which lets you see what you qualify for and complete the forms to enroll on your own, absolutely free. Our most popular plan is our Essential plan. This plan unlocks all the features of Savi, like letting us create your applications digitally, getting access to personalized one-on-one support from our student loan experts. It lets us monitor your loans to keep you on track. It is our most popular kind of all-inclusive plan, and we encourage you to check out the plans available and enroll in Essential. That way you can make enrolling in these programs a breeze. So if you already have your Savi account, you can scan this QR code to go right to this page to see the plans available, select the one that's best for you, and get started on our application. So in that application, we will ask for all of the information that we need to get you estimates for these programs. The first thing that we'll ask for is your family information. Because income-driven plans are based on your family size, we'll ask for all of this info to get those numbers, asking things like where you live, what your tax status is, if you have dependents, and we'll use all of this information to calculate that monthly payment for you. Next up, we'll ask for your income information. So we will ask if your income has changed to determine where you should look to calculate your income and what your actual income is. And we do have resources on all of these pages. So as you're working through it, if you have questions, you will be able to be connected with resources to ensure that you are providing accurate information to get an accurate estimate. Next up is employment. So this page is very beneficial for borrowers that are interested in pursuing PSLF. That is Public Service Loan Forgiveness, and that forgiveness program is based on your employment history. So we encourage you to add all current and past employment to this page. That way you can see if they meet the requirements for public service loan forgiveness. We've made it really easy to add in your employers. You can search through our database that has over 1 million employers in it, and we'll let you know if they meet the requirements and if they are a qualifying employer for PSLF. You should add all current and past employment here. That way we can take a look at your entire situation and make sure that we are counting everything possible to get you credit for all of those payments you've made. Once you've got all of your employment added on this page, you can proceed to the next page to provide us with all of your loan information. So on this page, you'll be able to add your federal and private loans to your page. The easiest way to do this is to sign in with the same username and password as your online servicer's account. We are in a bit of a transitionary period right here. A lot of people are being transferred to new servicers. Some servicers have stopped, some new ones have popped up. So if you are unable to add your loans on your online account, you can always add them manually or by uploading a student loan data file. So we have lots of different options for you to add your loans on this page so that we can take a look at your situation. We encourage you to add all of your loans on this page because this is what lets us see things like your loan types. So there was a question about consolidation. If you need to consolidate, this page will be helpful because it will let us identify your loan types, identify that you need to consolidate, and help walk you through that process. We'll also be able to see things like your repayment history to know how many payments you've made, how far along you are towards forgiveness. I think this may be the most important page of the Savi application. So be sure to add your loans on this page so that we can get you those estimates at the end. And finally, that page everybody wants to get to, the plan options to see what you qualify for. After you've added in all of your information, the plan results page will show you all the programs that are available to you. You'll be able to see what income-driven plans you qualify for and see exactly what your monthly payment could be on those plans. You'll also be able to see how far along you are to forgiveness and how much forgiveness you can receive. So in this example, you can see that after entering all the information, you can qualify for the SAVE plan. In this example, your monthly payment on the SAVE plan would be $95 a month. You would qualify for forgiveness in about 9 years and 6 months and get a total forgiveness of $23,188. So we've made it really simple to see everything at a glance. But if you want to know exactly what went into getting you those numbers, you can click Show Plan Details to see information like how the payment is calculated, what forgiveness program this is through. Anything and everything you want to know is right here. The results page will automatically show you the plan that saves you the most and gets you the most forgiveness. But if you want to see everything available to you, you can click Show More Plans to see each option that you can enroll in. Anyone can get up to this page absolutely free to see what you qualify for. But if you want our help enrolling in the plan and getting those applications submitted, you will need to be an essential member. So once you've found the plan that's the best fit for you, you can click Continue to get those applications created. If you are an essential member, this is where that membership is really beneficial because it lets us create the applications digitally. On the right, you can see what the income-driven application looks like. We will pre-fill it with all of the information that you entered in your application to ensure that it is filled out correctly. Believe it or not, the number one reason that applications are denied are simply because they are filled out incorrectly. But by working with Savi and us pre-filling this application, we can ensure that it is completed correctly and has the best possible chance of being accepted. We'll take care of getting it submitted to your loan servicer. That way they can process it and enroll you in your selected plan. On the left, you can see what it looks like if you're applying for public service loan forgiveness. You'll be able to see all of your employers that qualify for forgiveness, and you'll have the option to create the application for them. We will take care of sending it to your employer, getting it signed, and submitting it to your servicer. So this essential membership has made applying for programs as easy and stress-free as possible. Once you've created all those applications, you'll be able to track their statuses back on your dashboard. You can see exactly what step of the process you're on, whether your employer has signed your form, if it's been submitted, and if it's been processed. That way, you know what steps are still needed from you to get those applications to 100%. As you're working through the application, if you have questions, we are always here to help. You can click Contact Support from any page of the Savi website to be connected with resources. Anyone is able to reach out to our Help Center, which includes frequently asked questions, articles on common student loan topics, and even videos that walk you through completing the application. If you are an essential member, you'll have the option to reach out to our support team to get that one-on-one personalized help from our student loan experts. And finally, we just launched a brand new call center, so feel free to give us a call weekdays from 9 to 5 to get your questions answered in real time. You can access any of these resources simply by clicking Contact Support when logged into your Savi account. All right. I know there's lots of questions still to answer, so we will spend whatever time we can answering them, but I'll leave you with some next steps. If you haven't already, be sure to create your Savi account. That way you can see what you qualify for. We encourage you all to upgrade to Essential. That way you can access all the features of Savi and make enrolling these programs as easy as possible. And be sure to complete those applications to get enrolled and be on track for payments to resume this fall. So let's take some time now to answer some questions. I see more popping up. I know you all have lots of questions, so let's do our best to answer as many as possible.
Great, thanks, Jobe. So one of the things that I've seen pop up a few times here, if you can maybe clarify, is Savi a servicer? And what role then does Savi play with servicers? How do we work with, servicers like Nelnet, Mohila, et cetera?
Great question. So we are not a loan servicer. Instead, what we do is we work with you and your loan servicer to help you find programs that are available to you and to take advantage of them. So no matter who your loan servicer is, whether Nelnet, Advantage, Mohila, we can work with any of them. What we'll do is show you what you qualify for, we'll help you enroll in these programs, and then we will take care of getting you enrolled with your servicer. We help make sure these applications are processed successfully. If for some reason any issues do come up, we'll be able to work with you and your servicer to resolve them. So we are kind of there to just guide you through the process, help you understand what's available to you, and take some of that burden off of your shoulders. That way you're not navigating it on your own.
Great, thanks, Joe. A couple other questions that came through, around, spouse income and information. And so why Savi might be asking for, spouse income information. Can you maybe just provide some clarity around that and why it's important potentially for calculating your income-driven repayment options?
Definitely. So, as I've mentioned, the number one goal of income-driven plans are for them to be affordable for student loan borrowers. One of the ways that they do this is by taking in your spouse's student loan balance into account. So if your spouse has student loans, likely they have their own payment to make, and that factors into whether or not you are able to make your student loan payment. What these income-driven plans do is they account for that balance. And typically what that does is that lowers the monthly payment for both borrowers if you're enrolled in an income-driven plan, making it more affordable. That way, you can have that low monthly payment. So what the Savi application does is if your spouse has student loans, we will ask them to complete a very brief shortened version of the application where all they need to do is provide their loan information. This is really beneficial because it lets us account for that balance and help lower your monthly student loan payment. That way you have the lowest possible option. So if your spouse has student loans, they'll be asked to complete a very shortened application to provide their loan info, and we will include that when calculating your monthly payment to show you what the lowest possible payment you qualify for is.
Great,
My
thanks, Joe. Sorry, Joe, go ahead.
No worries. I was just going to say another common question we get with that is, does that make my spouse responsible for my loans? Will my spouse be involved in them? And the answer is no. The balance will be factored in to help lower your payment, but the loans will still be in your name. It doesn't transfer the loans to them. So don't worry. You can have that added to your account without any stress or worries of any repercussions.
Got it. And if your spouse doesn't have loans, just to clarify, we might be asking for their income, and that really depends upon your tax filing status, right? So if you are, married filing separately, we'll look at just your income alone, versus if you are married filing jointly, it will look at you and your spouse's income combined. All right. Let's see here. Just to clarify, this new SAVE plan and any of the income-driven repayment plans are all eligible to count towards public service loan forgiveness, correct?
Yes. So any income-driven repayment plan can qualify for PSLF. There are 4 different plans available, which are SAVE, Pay, IBR, and ICR. Any one of those plans, your payments can count towards forgiveness under income-driven forgiveness or public service loan forgiveness.
All right, thanks, Job. Another question that came through, someone says, I was working for a qualifying employer for, 10 plus years. And, while the federal loans were paused, do those months count towards public service loan forgiveness, towards the 120 credits that you need to achieve full forgiveness?
The great thing about the payment pause is that those months will count. So if you are pursuing PSLF for any month during the payment pause in which you were still working in public service, you can count that month as if you made a payment. That way you can continue your progress towards forgiveness. All you need to do to get credit for those months is submit an employment certification form for your employer during the payment pause. Once you turn in that form, Mohila, who is the servicer that manages PSLF, will go through and look at all of those months and give you credit for pause months where you would have made a payment. So if you are someone working in public service pursuing PSLF, we encourage you to submit an employment certification form for those employers to get credit for those months. For those of you that are pursuing income-driven forgiveness, which forgives your loans after you have paid for a certain amount of time on an income-driven plan, The good thing is the payment pause will count for those months too. So lots of different options for how to get credit for it. What you need to know is PSLF, submit your employment certification form, income-driven forgiveness. Those months will automatically be factored in.
Great. Jobe, can you provide some clarity on what an ECF is, and how it might be relevant to, a program like public service loan forgiveness?
Definitely. So we have lots of acronyms here. An ECF stands for Employment Certification Form, and this is the public service loan forgiveness application. The way that you apply for public service loan forgiveness is you get this employment certification form. It's signed by both you and your employer, and it proves that you work in public service. Once your employer has signed this form, it's sent to Mohila. Mohila will then look at all the payments you made while working at that employer and count them up and add them to your total for public service loan forgiveness. So by working with us here at Savi, we can create those employment certification forms for you, send them to your employer to be signed, and get them submitted. The ECF, as we call it, is the only application needed for public service loan forgiveness. And all you need to do is get that form signed by your current and past employers, turn it in, and you'll get credit for the past payments that you've made. If you create that form through Savi, like I said, we'll be able to create it, submit it for you, and you'll also be able to track the status of it so that you can see if it's been turned in, processed, and have it all at a glance to make that application process as easy as possible.
Great, thanks, Jobe. A couple other questions have come through around, how much does it cost to upgrade to this essential service, and where can they find out what that cost would be? So maybe can you just provide some clarity on sort of how that works and how it sort of differs depending upon your Savi partner and where they can find out, what that might be for them?
Definitely. So depending on who referred you to Savi, whether it was your membership organization or your employer, in some cases, the organization may offer a discount on the price of Savi. So because of that, depending on who referred you, depends on how much it costs. You can go to your Savi account on your dashboard and click Select a Plan. When you do that, you'll be able to see all of the Savi memberships available and see exactly what the cost for Essential is for you. You'll be able to see if your employer offers a discount and get enrolled right away. So if you are interested in the Essential membership, you want to access all the Savi features, scan this QR code. It will take you right to the upgrade page to see what the cost is. That way you can get started.
Great, thank you, Jobe. So, I'm seeing a lot of questions, a lot sort of specific to people's individual situations. I know it's been 3+ years on payment pause. And so a lot of people are trying to figure out, what their best options are going to be. There have been a lot of changes and new programs that have come about. And so I can't recommend enough, if there was any time to utilize Savi's essential service and have a conversation with our expert support team, it would probably be now. And through that one conversation and interaction, we're going to be able to help you figure out what your best options are going to be, and to help you enroll, whether it's going to be your income-driven repayment application, and or your public service loan forgiveness forms, to make sure you're all set up. So that way, when payments resume in October, you can transition smoothly back into repayment. So we put that QR code on the screen. We will also put a link in the chat as well. But we are looking forward to being able to help more of you, individually, as the coming weeks progress. All right, let's see a few more questions that have come through. So, a lot of people are asking about utilizing Savi for family members. And if they should create their own accounts or not. Jobe, could you provide maybe a little more clarity on, whether it's your loans or your kids' loans and how they should set up their Savi account?
Definitely. So the Savi account is always for the person who has the loans. Maybe you don't have loans of your own, but you have a friend or a child that has loans. They can sign up for Savi as well. And they can create their own account. We always encourage the person who has the loans to create the account. That way we can see their specific situation. For a lot of these programs, it's based on individual factors like income or employment history, and it can be confusing to try and maybe fill out information for someone else. So we always recommend whoever the person is with the loans to create their Savi account so that they can enter that information accurately and we can help them get enrolled. If you know anyone with their own loans that could use some help and get that Savi account created, you can send them an invite from your dashboard. They will be able to sign up, get started, and get help with their loans as well.
All right, great. Thank you, Joe. Another question that came through, if someone is eligible for public service loan forgiveness, do they need to wait until they start making payments in October to apply for public service loan forgiveness, or should they and can they apply now?
You can and you should apply right now. Because the payment pause counts towards PSLF, you may already have credits that you don't know about. So submit that form right now to certify your current and past employment. That way you can get credit for your past payments and know exactly where you stand and how many more payments you need to make before those payments resume. So if you work in public service, you think you qualify for that program, I would encourage you to log into your Savi account, create that employment certification form, and apply right now, especially because they have some long wait times. There's a lot of people applying, and the sooner you apply, the better. That way you will get those results, know where you stand, what you need to do, and maybe if you need to take some additional steps to get on track for forgiveness, like enrolling in an income-driven plan, now is the time to do that as well. So that when you are actively making payments, you know that everyone is counting towards forgiveness.
Great. Thank you, Jobe. I just wanted to call out. So we just realized we made a typo with the number that we had put on the screen that you're seeing right now. Thank you to those users who flagged this for us. I'm going to put this number in the chat right here. It is 833-382-3175. If you want to write that down, and I just put that in the chat as well. So again, that is 833-382-3175.
I do see it.
Go ahead, Jobe. Sorry.
Thanks for flagging that number, Lindsay. I was going to say, I do see a question here also related to PSLF, which says, how does that program work once I've made the required number of payments? So the way that public service loan forgiveness is set up is that you work in public service and you make 120 payments. Once you have made that 120th payment, whatever remaining balance you have left will be completely forgiven. So whether you still owe $1,000 or $100,000, whatever balance is left, including interest, will be forgiven once you've made that 120th payment. So that is why it's really beneficial to certify your employment, apply now. That way you know how many payments you've made, how many payments you still have left. That way you can get on track and stay on track for forgiveness.
Thanks, Jobe. One thing I just wanted to call out, I've seen a couple of questions about this, in fluctuating income throughout the year, perhaps, right? So just to reiterate, you're able to submit or resubmit an income-driven repayment application at any point in time during the year if your income has changed. And there are also two forms of supporting documentation that you can use. You can either use your most recent tax return, or you can use a pay stub from the last 90 days. So if you are a borrower whose income fluctuates, maybe you are hourly, right? And so some months, you make less than other months, some months you might be working overtime and not others. You can use your pay stub instead of your tax return. Let's say you use your pay stub from one of those lower earning months, and they will basically calculate out that amount for the rest of the year, right? As if that is your yearly income. And so it could help you qualify for a lower monthly payment. So you do have the option, again, and it really could depend upon your taxable income, whether you're hourly and things like that, and it fluctuates from month to month, whether you decide to use your tax return or a pay stub. All right, a couple other questions around public service loan forgiveness as well. Jobe, how often should people be submitting their employment certification forms?
So here at Savi, we recommend that you get all your current and past employment certified right now. So in the first kind of round of applying, you'll submit forms for all of your past employment plus a form for your current employer. Once you have kind of caught up to where you're at right now, you'll then only need to submit an application for your current employer every 12 months, or if you switch employers. So by submitting this application once per year, it helps you get credit for a year's worth of payments. Keep tracking your progress towards forgiveness. That way you can stay on track and get forgiveness as soon as possible. A common question that we get about this is, why do I have to apply every year? The reason for that is because when you submit an employment certification form, your employment is only certified up to the date the form is signed. You have to submit a new form to prove that you continued working in public service. So then the next question is, well, I'll just wait till the end to apply. But we don't recommend that because something may have happened where you got off track for forgiveness, making all these payments, thinking they're counting, and then you get to the end and realize they don't. By submitting that form once per year, it helps ensure that you're getting credit for every payment. You're staying on track so that you can get that forgiveness as soon as possible. So our recommendation is apply now, get credit for what you already have, and then moving forward, submit that form once per year.
Awesome. Thanks, Joe. Can you just maybe mention quickly, for any borrowers that might have been in default before the payment pause, there's a new program that came out in the last year. Could you maybe just touch on that for a bit for any borrowers who are interested?
Definitely. So if you are a borrower in default, normally it can be difficult to get out of default and back into good standing. But there is a new program available called Fresh Start, which is designed to get you out of default and back into good standing as quickly as possible. If you are a borrower that has loans in default, you can call your collections agency and tell them you want to opt into Fresh Start. Once you do that, the process will take about a month and you'll be brought out of default, put back into good standing. And the benefits of this are really great because you will be out of default. You'll no longer be reported as default to your collections agencies. You will have restored access to enrolling in an income-driven plan. There will be no collections calls. The benefits are kind of endless. So if you have a defaulted loan, we encourage you to call your collections agency, opt into Fresh Start. That way you will be good to go when payments resume this fall.
All right. And then sort of related to that, in addition to submitting those public service loan forgiveness recertifications, each year, will borrowers need to submit an income-driven repayment recertification once per year as well?
You will. So when you enroll in an income-driven plan, you will be approved for a set payment amount for 12 months. After that 12-month period, you will then need to recertify your income. That way, if your income has changed, the payment can stay at the 10% amount. If for some reason your income decreases, you can recertify early to have your payment adjusted and lowered at that new income level. So yes, you will need to update your income at least every 12 months.
Great. Thank you, Joe. All right, let's see. Again, a couple more questions about, how much is that essential plan through Savi? Again, you can access that from your Savi dashboard. On the left-hand side, it will say, your Savi plan, and that's where you'll be able to see whether or not your employer or membership organization has perhaps subsidized that cost. Usually it is no higher than $60 a year, not a month, a year, and it is 100% money back guarantee. So we really want people to have confidence in the services and the support that we are providing you all. All right. Well, I know we are getting down to time here. So I think we're going to wrap things up. Again, we are hosting another webinar today at 4 p.m. Eastern for those who want to join on again. And we will be hosting more of these in the coming weeks leading up to September and October when payments are going to resume. So we hope this was helpful. And we have one more slide we just want to show everyone, I believe. So Jobe, if you want to take it away from here.
Sure. So one last opportunity that we want to let you know about. Now that you are connected with Savi, you're starting to manage your loans and make it easier, you may be thinking about continuing your education. If you are, we have an exciting new partnership with Western Governors University, which is a nonprofit online university, and they can offer flexible and affordable degree options. There's no application required. All you need to do is submit the interest form that we will send a link for in the chat, and we'll give you more information. So if you are thinking about going back to school, feel free to fill out that interest form and we can connect you with these resources. And with that, we are just about out of time, so we can wrap up. As Lindsay said, thanks for joining. We are offering more of these sessions, so feel free to join, learn some more, get your questions answered. If you do have a question we didn't get to, I encourage you very, very strongly to start that Savi application, enroll in Essential, and reach out to our support team to get your questions answered in a more one-on-one situation. So thank you so much, everyone, for joining. We really appreciate your time. We look forward to working with all of you, and I hope you all have a great afternoon.